whether it is finance, marketing, or fashion world, everywhere trends are being set, and the same trends are being followed by rest of the corporate. Now, in regards to the finance, now there are various sectors which comes under the finance, like insurance companies, bank, mutual fund companies, then NBFC. NBFC means non-bank financial corporation, then financial corporation. These organizations are the part of finance field, and every part of this finance, they follow particular trend. Now, if you pick up the example of insurance company, insurance. Now, in insurance, way back to before privatization of insurance, there was hardly one company which was in India, and that was Life Insurance Corporation of India, LIC, popularly known as LIC. That was the only organization which was providing insurance product to the public. But after privatization, today, if you observe, there are about 20 plus companies who are providing life insurance product. Same happens with non-life insurance also. Now today we have started unit number 1. Okay, am I audible?
Yes, sir.
So today we are starting unit number 1. The concept of current trends and its impact and importance. And I have picked up the example of insurance sector. Insurance sector. We will be discussing 2-3 sectors of finance: insurance, then bank, and maybe NBFC. But today we will check out insurance sector. As I told you, in life insurance, there was only single company before privatization. Any idea when privatization happened in insurance sector? Anyone knows? When government introduced privatization for insurance sector, in which year? Yes, please. Any idea? See, 2011 was the year. In this year, Government of India introduced privatization of insurance sector. Prior to 2011, means right from independence, that is in 1947 till 2010. As I told you, there was only one company, Life Insurance Corporation of India, LIC, which was the sole company who was providing insurance product to the public. But after 2011, when this sector was open for private player, so many players enter into the insurance sector, like Bajaj Allianz, then ICICI Prudential, HDFC, and so on. These are corporate. They also enter into the life insurance product, and they started their business in India. Because today also, but I'm talking about in 2010-11 story, a huge population was away from insurance. So they felt that there is a huge scope for this insurance business. And because of this, they enter into insurance area. Since most of the population was not covered under insurance, so company felt that why not to start business in this sector and grab the opportunity. But there were some misconception and very narrow thought was in insurance sector. Misconception, narrow thought in the sense that people who were investing in insurance, they had in their mind that insurance product should give us some benefit. It should be as a saving instrument and not as a risk instrument. Actually, insurance means to cover a particular risk. That is the very meaning of insurance. But Indian people, they had in their mind that insurance, it is like a saving product. Like suppose if you keep a fixed deposit in a bank, what bank pays to you? If you are keeping fixed deposit or if you open RD account in a bank, what bank pays you? Yes. What bank pays you? What bank pays? If you open fixed deposit or recurring deposit account in a bank, in terms of that account, what bank pays to the account holder? Answer me. Nothing is paid by bank to the account holder. Hello, am I audible? Hello, hello, hello. Can you hear me? Hello. So what is being paid by bank, Chaitanya? If you open a fixed deposit account or a recurring deposit account in a bank, in terms of that account, what bank pays you? Hello. Bank pay us interest. Simple. Bank will pay you interest. So interest is the income which we get on fixed deposit or recurring deposit. Am I correct? Am I correct or not?
Yes, sir.
Now, this is a thought which people pursue in case of insurance also. Whatever amount means premium they are paying to the insurance company, they should receive something back from insurance company. And actually, this is not a principle of insurance companies. Insurance companies are being run on the principle of many people, they buy insurance product, company accept the risk, and if something goes wrong with one or two policy holder, then the compensation is being paid by insurance company. So many people contribute by way of insurance, and if loss incurs by a particular person, that loss is being compensated by insurance company, and the remaining amount is being utilized for the establishment expense as a establishment expenses of insurance company. Like there are staff, so salary to staff, then rent for office building, some equipments like computer, whatever the equipments are required. So that kind of expenses are incurred by insurance company. So such expenses are managed through premium account. Now, if you observe insurance sector outside India, most of the foreign countries, these people, they are purchasing insurance product to cover their risk, potential risk. But in India, this thought has not been inculcated in the minds of investor. Even most of the people today also, they see what are the returns they will get from the insurance company. And that is why most of the people, they are not in a position to understand the real meaning of insurance product. So this was the old trend in insurance companies. Now, what is the new trend, current trend in insurance? Now, because of the complexity of individual as well families, and because of this complex structure, now people have understood the real meaning of insurance, and that is why now many people, they are going for term insurance. So endowment and term, these are the basically two different products which comes under the life insurance, term insurance and endowment. Have you heard the word term insurance and endowment? Hello? Have you heard this word term insurance and endowment policy? Term policies and endowment policy? Now this has been new trend which is set by insurance company, and they are attracting many policy holders to buy term insurance and endowment policy. So my point is here, all of a sudden trend cannot be set in any field. It takes some time. You will have to pursue that particular goal or objective, and then gradually, slowly, people understand about the insurance. Then, as I told you, that insurance privatization happened in 2011. In the same year, Government of India, they introduced, in fact, regulator in the insurance sector. Like in banking, there is a regulator. Who is the regulator in banking? May I know who is the regulator in banking sector? Which is the apex bank in banking? Regulator means, or apex means, who has controlling power, who controls, who issues license. That is known as regulator or apex body. So in banking, who is the apex bank or who is the regulator in bank? Hello? ऐकू येते का तुम्हाला? Hello?
Yes, sir.
So who is the regulator in bank sector? Who is the regulator? Who is the regulator? Who is the regulator in banking? Reserve Bank of India, RBI. Please, you all are finance student. Am I correct?
Yes, sir.
So finance student should know these basic things. Regulator in banking is Reserve Bank of India, RBI. Now let me tell you about something about RBI. Reserve Bank of India, which was established in 1935. 1st April 1935, Reserve Bank of India was established. And the main objective of Reserve Bank of India was to print the currency and to ensure the flow of money in economy. So these are the main two objectives of Reserve Bank of India. Now ensure flow of currency in economy. How do they maintain this objective? By through monetary policy. So every after quarter, monetary policy is being declared by Reserve Bank of India with consultation of Government of India. And they announce about the repo rate, reverse repo rate, bank rate, interest rate. These are the rates which are declared through monetary policy. And the reason behind is that to ensure the flow of money into the economy. Now, many times we observe in the market that all of a sudden the cash is available with bank, and then banks are searching customers, good customers who can avail loan facility. So why it happens? This happens because of the monetary policy. This is the impact of monetary policy, which is designed by Reserve Bank of India. Then reprinting of currency, whatever currency you are having, like say 500 note, 100 rupees note, 200 rupees note, 50 rupees note. These all currencies are being printed by Reserve Bank of India. So they have different locations for printing currency. Now even in Maharashtra, in Nasik, there is printing press of currency in Nasik, and then another one is in near Kolkata. So these are the locations where the notes are being printed. Any one of you from Nasik? Hello? Anybody of you from Nasik? पुणे आहे का इथं नाशिकचं? Nasik or near around Nasik? Hello? Can you hear me? Can you hear me?
Yes, sir.
So are you aware that in Nasik there is a currency printing press? माहिती आहे का? Not aware. So please remember that in Nasik there is currency printing where the notes are being printed, and another location that is in Kolkata. So this way RBI prints currency and it is being circulated in the market. If you observe currency, there was also some trends, new trends have been followed. Before independence, that time there were coins. Even today also there are coins, but the proportion of coin is little bit less today. But in old days, that is in 1950, 1947, the coins proportion was higher. Then what RBI did? They have changed this trend because making of coin, what is the cost of making coin and the value of that coin? They observe that making coin has become costlier than its value. Are you getting my point? Making of coin became costlier than the value of coin. समजता का मैं क्या बोलता है? हेलो 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 Are you getting me? Hello. Hello. The coin which was introduced in 1950, 1947, if you observe, yeah, some students might be having collection at their home. The coin of that time it was called as a ana, 16 ana, 16 ana. It is nothing but the near to one rupee, 1 rupee, and that coin was made out of silver. So silver metal was used for making this 16 ana coin, that is 1 rupee coin. Now you know the price of silver. Making itself was costlier than its value. Value is what? 1 rupee. But making charges was higher than 1 rupee. So is it affordable by government? Is it affordable by Reserve Bank of India? Hello? Is it affordable? If making charges are higher than its value, is it affordable by bank to make a coin? The making charges itself was costlier than its value. Value is 1 rupee and making charges was say about 7 rupees. So RBI realized that making charge should be lesser than its value. It should be very negligible. Now suppose if you today pick up 500 rupees note, so making charges of 500 rupees note, it is not 600 or 700 at the most, because they are printing notes in a bulky manner. So the making charges, it is hardly 70 or 80 rupees and the value is 500. Making charges is 70 to 80 rupees and value is 500. So this proportion is being maintained in currency, and whenever the making charges become costlier, then RBI changes its pattern, and this is called as a trend in currency printing. Trend in currency printing. Then maybe in color, then maybe in the safety measures, like say if you observe 500 rupees note, then if you keep that note opposite to the light, then you will see the different colors and some strips are there. Silver strips are being inserted in note, and through this strip we identify whether the note is genuine one or fake one. Fake one and genuine one. This way we understand the difference. Then again, there are some reflections. That reflections come through the genuine note. If it is a fake note, then such color reflection won't be seen by you. Are you getting my example? Hello? Hello? Hello, students? Am I audible? Are you understanding my example about new trends in currency printing? Now, recently, after a demonetization of currency, demonetization, when demonetization happened in India, demonetization, you are aware of that. When it happened, demonetization, hello? Demonetization, when it happened in India, no idea. When it happened, demonetization, not aware, demonetization, which is called as government banned the note of 1000 rupee 1000 that was banned in 2016. माहिती आहे ना नोटबंदी? हॅलो, नोटबंदी माहिती आहे की नाही?
Yes, sir.
So after this demonetization, if you observe, the Reserve Bank of India, they introduce different color notes. Now today, if you observe the note of 2000 rupees or 500 rupees, even 50 rupees, 20 rupees note. Earlier, 20 rupees note was little bit lengthy, but nowadays 20 rupees note they have shortened. So these are the trends which are followed by Reserve Bank of India in case of currency. Now, since we're talking about banking area, what is the prime function of bank? What are the prime function of bank? What are the functions of bank? What do they do? State Bank of India or Canara Bank, Bank of India. What are their functions? A very general question I'm asking you. What are their function? Do you have bank account? Have you opened bank account with any bank? Hello? Have you opened bank account with any bank?
Yes.
Which bank you are having account, Chaitanya? Which bank?
Bank of Baroda.
Bank of Baroda. So what are the functions of Bank of Baroda? What services they provide you? Bank of Baroda,
Online banking, ATM, checkbook, digital
online
banking,
banking,
net
ATM
banking.
card, net banking, NEFT, fund transfer. So Bank of Baroda also has a what we call as locker facility. Do they have locker facility? Locker.
Yes, sir.
So they have locker facility. Now suppose if you have received check from other bank, suppose if you have received check from Bank of Maharashtra and your account is with Bank of Baroda. So can you deposit check of Bank of Maharashtra in Bank of Baroda? That facility is available to you or not?
Yes, sir.
It is available. So this is called as clearing of check. This is known as clearing of check. Now whatever checks you are receiving from different bank, that check you can deposit in your bank account and your bank will realize that amount and will credit to your account. So that is known as clearing of checks, clearing of checks. So this is one function of a bank. Now core banking. Now this has been, as you said, NEFT, core banking. These are the new trends in banking. Earlier, these trends were not available. This facility was not available. Core banking was not available. Core banking, it happened in 2000, in the year 2000. Now most of the banks are following core banking system. Then bank also issue checks, issuing of checks. So this is another function, issue of check, deposit of check. Then as I told you, the locker facility, locker. If you are having some precious important things, those important things can be kept safely in bank account, in locker. And for that purpose, bank charges some amount to the locker holder. But nowadays, almost now all banks, whether it is private bank or nationalized bank, they are following another trend, and the current trend is asset liability management. Assets liability management. Now, what is asset liability management in a bank? From the bank point of view, what are the assets? Bank's assets are not building and machinery, computer. These are the assets, no doubt. But apart from this, their assets are, now suppose Bank of Baroda, if they have given loan to the industry or companies, small scale companies, large scale companies, whatever loan they have given, means Bank of Baroda has given, that loan is asset of a bank. That loan is an asset of bank. And what is liability? Whatever deposits Bank of Baroda has taken from public. Now suppose if Chaitanya has opened his account in Bank of Baroda and if he has kept say 1 lakh of rupees in Bank of Baroda in the form of fixed deposit, so that becomes liability for Bank of Baroda, because Chaitanya can withdraw that 1 lakh of rupees at any time, any point of time. Am I correct? So if Chaitanya is withdrawing 1 lakh of rupees, maybe after 1 month, so banks should be in a position to pay back to Chaitanya. If your bank fails to pay, then what will happen? Then this news will be spread in the market that particular bank is not paying on time, and because of this, what will happen? The news spread in the market, and then people do not believe on that particular bank, and then bank faces financial problem. ज्याला आपण म्हणतो दिवाळखोरी, insolvent. bank becomes insolvent. So that should not happen. So that is why the trend is asset liability management. The trend is asset liability management. There has to be proper asset liability management, and that is why we have also another subject, risk management. We have started from yesterday. This has also been entered into the banking area, that how the risk to be managed. Now, let me share you about the bank. Can you see my PPT? Hello? Can you see PPT?
Yes, sir.
Commercial banking. Okay. Now I am showing you the process of commercial banking and its development in India. Please go through this slide. Okay. Read this slide. Now the reason we are showing this slide, that how the trend has been passed on in the banking, and this way this development happened in commercial banking. So right from 1949 till 1996, if you observe that how this bank has set their trend. Now say in 1949, Banking Companies Act was passed, and then nationalization happened. Nationalization is what? That banks were controlled by government. So maximum share was given to the government. That is known as nationalization. Then 1955 and 1959, SBI. Then in 1961, this new thing was introduced, that is insurance cover to deposit. Because whatever deposit kept by account holder, if something goes wrong with bank, then people were not getting their deposit back. So in order to insure their deposit, insurance was introduced in 1961. Now even if you visit any bank today, even for if you are having deposit up to deposit rupees 1 lakh, all deposits are being covered under insurance. So you don't have to worry, because deposits which are below 1 lakh of rupees are being offered insurance cover. So this is nothing but the safety which is given by bank. So this new trend has come into the bank. Now let us know the growth of RRB and this commercial banking growth. Let me share you the slide. Can you see my slide? Growth and structure of commercial bank in India, right from 1951 to 2007. How it has. Can you see my PPT? Hello? 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 Can you see PPT? Hello?
Yes, sir.
Now look at here, the amount of deposit. It has been growing year after year. And if you observe 2007 figure, it is in crores of rupees. So this much amount people are keeping now in the bank. So people, they feel that it is a safe area. Now, this talk about the growth and structure of commercial banks. Now this is growth, number of banks. And growth is also in terms of rupees, amount of deposit, number of offices. Because of this number of offices, what happened? Employment opportunity is also generated by bank. More people, they get employment in a bank. So as you increase number of office, people get job opportunity. Now let us, as I told you, about management of liabilities of bank. What is the management of liability? So I give you the example, deposit. It is known as liability for a bank, because if you keep deposit with bank, it becomes liability for a bank. Anytime if person withdraw, bank should honor that withdrawal. That is why it is liability. So deposits are demand deposit. Demand deposits where they get current account and saving account. If you open saving account, minimum amount you have to keep in a bank. You keep minimum amount in a bank or not? If you are running saving account, am I correct? If you open saving account in a bank, minimum amount you are supposed to keep in a bank, or there is no requirement of minimum amount? Hello? Is there requirement of minimum amount or not? Hello? Is there requirement of minimum amount or not? There is a requirement. Then, there are also term deposit, like say fixed deposit. These are called as a term deposit. And whatever amount bank borrows, that is also liability of a bank. Now, quickly we will understand the assets of bank. What are the assets of bank? Management of asset bank. Cash in hand and balances with RBI. This is known as asset of bank. Whatever balance they keep with RBI, that is the asset of bank. Then assets with banking system, like say their computer, their machinery, furniture, buildings. Some banks they have their own buildings, so this becomes asset of banking system. Then whatever amount bank invest in government securities, that is also part of asset of bank. Then bank credit is a part of assets of bank. Now, at the last, we will talk about the recovery of debt, because this is one of the very important area in a bank, and new trends are being followed in the recovery of debt. Recovery of debt. Now, chasing of late payment is regular activity for most businesses and sale on credit. So you have to have a separate department for a recovery of loan. And nowadays, RBI also have put up new provisions for NPA. NPA means non-performing assets. Whatever loan given by a bank, if bank is not able to recover that loan after 90 days, then it becomes NPA. NPA means non-performing assets. So an effective approach to debt collection helps boost cash flow and reduce the risk of overdue payments, turning into bad debts. Bad debts means bank have given loan, but there is no recovery from opposite party. And if bank fails to recover amount, then what happen? Then bank become insolvent. Bank become insolvent. So that should not happen. So this way, a recovery of debt is being, and there are some rules and regulation by RBI that each and every bank they should have their own recovery department. They should not outsource recovery department. If they outsource recovery department, then what happen? These people are forcing borrowers to pay loan. Forcing means literally they pick up their things from their home. Sometimes they use abuse language also. So these cases were reported to the RBI, and then RBI has put this condition that banks should have their own recovery department. They should not outsource. If you are outsourcing a recovery department, recovery of loan, then it becomes headache for borrower, because these people they work for commission. They work for commission, and for commission purpose, that is why they use abuse language. Sometimes they beat borrower also. So these cases were reported to the RBI, and now RBI has made it compulsory to have their recovery department. So these are the trends which have been introduced in the banking sector over a period of time. So any doubt so far? Management of bank, management of assets, and management of liability. Any doubt? What is liability of bank and what is asset of bank? Any query? Any doubt so far? Yes, please. Any doubt? Okay, then we will close today's session. Thank you all.